Okay, so this is a commercial loan scenario specifically for loan associates to walk you through questions you're going to ask, scenarios, live scenarios, um, specifically with the intention in mind of how do I size it up and then how do I give feedback specifically when I get done to those individuals that I run into. So there's lots of different scenarios. This one in particular is an investment, refinance, single tenant purchase of a credit tenant. So we're dealing with kind of a sort of a credit tenant situation. So the scenario is that there's a seasoned investor who's done a bunch of these. It's coming out of a 1031 exchange loan and is going to buy a single tenant triple net Dollar General building. So the asset information, again, you're asking about, tell me about the building, any environmental issues, the square footage, the condition, the build. In this particular case, it was a 7,000 square foot building in Tucson. It was built about 7 years ago. It was a Dollar General. It was about 9 years left on the lease for this scenario. So we're good there on the asset. Urgency. Again, what is driving you to do this at this time? Why can't you wait? And if we just remember that we're always looking for someone that really has a commitment, that there's urgency, that they have to do this. It's very important that they do this versus just a nice to. In this particular case, he was coming out of a 1031 exchange, high urgency, really had to get the deal done, very committed to it. So we're check there on the box. Loyalty factor. What other lenders are you talking to, and what's been their feedback? We're trying to find out, pushing it back. Who else are you talking to? What other brokers are you talking to? And we're not really, they weren't really talking with any particular, lenders. So we really, in this particular client, we've had repeat scenarios. They enjoy working with us. They're not going to shop around. So we're like, great. So that's a check there. And then viability. We're looking for cash flow, credit, collateral, credibility. So we're asking ourselves, what's the cash flow of the situation? So, what's the net income on the tax returns? In this particular situation for a single tenant triple net, what we're really focused on is the lease. So what is the lease income that's being generated for this tenant? Who is the tenant? How long is the lease? Is it triple net or is it modified gross or gross? But single tenant's obviously always triple net. But generally speaking, we're going to be getting the lease information from them to try to determine cash flow and maximize that debt service coverage ratio that we're going to try to get to. We do want to know some stuff about them: personal financial statement, cash flow, tax returns. So we just need a general understanding of where they were at. In this particular case, this guy has very complicated tax returns. He has tons of properties. He has a lot of debt. It's good debt and a very high net worth. It's probably worth $50 million. And so we know that we had to deal with someone that wasn't going to have to do a bunch of global cash flow because it would just be dead in the water. But do understand his schedule of real estate owned as well. Do you have any bankruptcies, foreclosures, short sales, lawsuits, etc.? Again, great credit, no issues there at all. He's been doing this for 25 years as a developer, so that's how long we know he's been in business. Dollar General's a credit tenant. They're publicly traded. They have great ratings. That's long-term lease for 9.5 years. It's good income. But they always are generally 65% loan to value for a single tenant, triple net credit tenant. Now, sometimes you go higher, but that's usually a good gauge for these. And so once we got past this, we felt comfortable with everything. Then, we're trying to say, well, what do you want? And obviously, how high loan to value, what interest rate, prepayment penalties, recourse, et cetera. He wanted non-recourse. I said we get maybe partial recourse. Need to get it done in 45 to 50 days. The prepay was definitely going to be there, probably a step down, 5, 4, 3, 2, 1. 65% loan to value, great interest rate for 9.5 years. I think we're in the high threes. And so what do we do for a single tenant, triple net credit tenant? Well, there's specific lenders for that. These are triple net credit lenders that do these loans. We could go to banks as well, but generally speaking, there are companies that do this. As long as they are qualified individuals, qualified tenants, like Walgreens, Starbucks, AutoZone, DaVita, Dollar General, etc., then you'll get a good long-term rates. What they do is they usually go commensurate with the term. So we're typically going to go fixed for whatever that term is. So if it's 9 years on a lease, we'll go 9 years. If it's 5 years, they'll go 5. They'll typically go the length of that and not do what's called a hangout. And so that's the advice we sort of gave back in this scenario is, 25-year AM, fixed for 9.5 years, partial recourse. So it worked out really, really well, and we felt very comfortable with this. And so this again is a scenario for investment, single tenant, purchase, triple net credit tenant deal.